Hello, folks, and we got massive news of the H bar variety for you. Yes, it's with BlackRock, the cabal. So, BlackRock is going to tokenize treasury funds. That's right, $25 billion worth of them on H bar through ARCX. Now, it is their ICS treasury funds. I did do a check. The ICX treasury funds are $1 million per share, and there's roughly 25,000 shares of them, which makes for $25 billion of tokenization. Now, from what I've read, it does not seem like you're collateralizing H bar to actually tokenize these funds. I think it's going to be kind of like a artifact or NFT type way of representing these funds. So I don't think you're going to be holding a lot of HBAR collateral for these funds. So it won't decrease the amount of HBAR in circulation. But however, it will be doing a lot of transactions. And most importantly for you investors, it creates hype, which means that's right, folks, number go up. That is the most important thing right now. But in terms of this news, there's a lot of good long-term implications, and Hedera is not done tokenizing things on its blockchain. So ARCX, Onera, and the HBAR Foundation have enabled the first tokenization of BlackRock's money market fund, MMF, on Hedera. This is a major development in real-world assets industry and comes after ABRDN PLC tokenized its MMFs on Hedera last year. So it's neither the first nor will it be the last. The crypto world has witnessed a historic moment in real-world assets industry after ARCX, London-based digital asset exchange, broker and custodian, tokenized BlackRock ICS US Treasury Money Market Fund on Hedera. They collaborated with HBAR Foundation and the institutional-grade digital assets platform Onera to bring MMF to Hedera. So, the thing about this is you think about how much Ondo has pumped based on the BlackRock hype, and I'm not really sure if BlackRock's really done anything with Ondo so far. They're directly doing something with Hedera right now, so this could actually be that type of hype, and that would be insane. Today we witness RWA history as BlackRock ICS US Treasury Money Market Fund is tokenized on Hedera and ARCX and OwnerDAO.io, marking a major milestone in asset management by bringing the world's largest asset manager on chain. That's right, Hedera is directly doing something with BlackRock, and that should boost up the price a lot. I mean, it's already pumped 40% today, could pump for, a couple more days, maybe not 40% each day, but definitely a couple more days, get that hype in there. With tokenized MMF allows for trading of their shares on exchanges such as ARCX and provide extra benefits. So they're basically just tokenizing, making them kind of like NFTs to trade. So they're not, like I said, collateralizing Hedera. If they were collateralizing Hedera for these treasury funds, that would be massively enormous. This is still awesome, but it won't really have an effect, I don't think, on the supply of Hedera right there. But this is not the last thing Hedera is going to tokenize. They're also working on gold and diamonds. So Hedera's got a lot of things going for it. Will this actually pump the price up besides hype? I'm probably going to say no. It probably won't pump up the price outside of hype because, like I said, it doesn't restrict the supply. But hype is actually what you need in the bull run. And this has hype in spades. And it's pumped something like 40-45% today. Incredible news for Hedera. I'm looking for more news on HBAR to supplement this in the future. But yes, Hedera price has soared to a 4-week high, and in the bull market, hype like this will actually pump coins even higher. I am more confident now that Hedera will actually get to $1, and hopefully my prediction comes true. But HBAR, excellent news for the project, real world utility. Has yet to see what effect that has on price. But with all this utility coming on, sooner or later, people might actually flock to its DeFi. So that's the news for Hedera. Tether is going to freeze Venezuelan money because they're using Tether to bypass oil sanctions. And of course, the US government, Uncle Sam, does not like that. If you want to deal with Venezuelan businesses, you need your approval from Uncle Sam. If you don't get approval, he will pwn you. And that's no good. And obviously, Tether is in deep pockets with the US government. They want to get in good graces of Uncle Sam. So they're going along with Uncle Sam is doing. They're freezing the Venezuelan assets. So if Uncle Sam doesn't like you, Tether is not a way out because Tether will work with the US government and shut you down if the US wants to get you. So it'll freeze addresses linked to sanctioned entities following a report that Venezuela's state-run oil company was using the stablecoin to bypass sanctions. And this actually, gives a really solid reason why the U.S. wants to shut down decentralized stablecoins all the time. Because if they have centralized stablecoins, they can control it. USDC is fully under their control, and it looks like Tether is becoming more and more under their control. I think they're going to be okay with Tether after a couple of these things, because they're going to be like, hey, you know what? Tether is listening to us. So, why don't we just let them operate? Because if there's bad guys or what we think are bad guys on Tether, we can just tell Tether to shut them down and they'll do it. Tether respects the OFAC SDN list and is committed to working to ensure sanctioned addresses are frozen promptly. This comes after an exclusive report from Reuters claiming that Venezuela's state-run oil company PDVSA has been using cryptocurrencies to facilitate its crude oil and fuel exports. The country is facing new oil sanctions reimposed by the United States. Don't ask me why the U.S. is imposing such sanctions, because I have no idea why the U.S. is imposing such sanctions. I am not privy to that kind of knowledge. The report, which cited anonymous sources, says the reimposed sanctions will make it harder for Venezuela to increase its oil product and export because companies will require U.S. authorization to do business with a South American nation. Venezuela obviously is a haven for like drug dealers and drug lords and stuff like that too, so it might have something to do with that. Or maybe Venezuela is doing like business with Iran or some other country that the U.S. doesn't like. And the sources claim that PDVSA has been moving its oil sales to Tether as a mitigating move to avoid funds being frozen in the foreign bank accounts. Well, that's not going to work anymore because Tether is working with the U.S. government, and the U.S. government is shutting Venezuela down using any means necessary. So yes, if you don't have a decentralized blockchain or a decentralized stablecoin, that's what will happen to you if you use a centralized stablecoin and you do it in wishes against the U.S. government. Not very good news for decentralized advocates. So, there's that argument that we do actually need a decentralized stablecoin. However, those algorithmically backed stablecoins are never really all that viable, and they're not dependable. So, not really sure how we're exactly going to solve that issue or if we're going to solve that issue at all. And Fidelity is actually bringing big news to the crypto market. They've drawn in $40 million in single investment from advisors. Now, $40 million is not a lot by itself, but this does mean that big advisors are starting to come on board. Remember, these institutions' advisors, they have to wait for a while before a Bitcoin ETF is, after a Bitcoin ETF is released, because they're not allowed to invest in a brand new asset. They have to wait like so many months. But this might signal that these big investors are starting to actually come in now. Maybe that 3-month grace period is over, the 6-month grace period is over, whatever. I'm definitely thinking that they'll come in this summer, and that can mean more money than we've actually seen so far. Remember, the prediction is like something like either $150 billion or $1 trillion invested into these Bitcoin ETFs within the first 5-10 years. And we've only got about $150 million, right? Well, I mean $15 billion right now. So we're at a very, very small part of what will initially be invested. And I think the second rush with the institutions will be even bigger than the first rush with retail investors. The reason why we're seeing demand drop down right now is because I think most of the single retailers are basically being tapped out of money. They've been buying like crazy for the first 3 months, and now they're out of money. So we're waiting for the institutions to be able to come in. But I think this does signal that there are a lot of institutions that do indeed want to come in. And we're definitely not joking with this. And they're not playing around. They're coming in with large amounts of money. So, very, very good news for people that are looking for the number for Bitcoin to actually go up, because there are a lot of investors, there are a lot of advisors that actually are very interested in this ETF, but they've been prohibited from buying it because they haven't done the paperwork or because they need to wait a few months because they're not allowed to buy a brand new asset. Now, the amount of money that can come in from these advisors and institutions is probably much greater than from individual investors. So there's a lot of good stuff happening, and there's a lot of good stuff to see as this comes along. So I'm very happy with this, and you should be too, because I'm more confident than ever that Bitcoin will actually reach over $100,000 probably this summer, if not in the fall. And there's still a lot of altcoin gains and especially meme coin gains to come in the future. So we are strapped in and we are ready for a big ride. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.